Thomas Bulkowski, the highly regarded author of Encyclopedia of Candlestick Charts, not only identified patterns, but he was able to build rankings of reliability around them. Bulkowski managed to retire at the age of 36 from his trading endeavours, and soon after he created a website called the Pattern Site. In this review, we provide the top 5 candlestick patterns from the 103 presented in the book, all of which you can apply to your trading strategies straight away. Let's take a look. Thomas Bulkowski defined 2 kinds of pattern outcomes: a reversal pattern, which predicts a change in price direction, and a continuation pattern, which predicts an extension in the current price direction. This is classed as a bullish example, although the same principle and classification also apply to a bearish pattern. Let's get straight into the 5 most reliable candlestick patterns, starting with number 5, the bearish 2 black gapping continuation formation. This pattern predicts lower prices with a 68% accuracy rate. The bearish 2 black gapping continuation pattern appears after a notable top in an uptrend, with a gap down that yields 2 black bars posting lower lows. This pattern predicts that the decline will continue to even lower lows, perhaps triggering a broader scale downtrend. Both black candles can be of any size, so long as the second black candle has a lower closing price than the low of the first candle. Bulkowski used a sample size of 18,264 patterns of this nature to determine a downside continuation. A continuation occurred 68% of the time after the formation. He also concluded that the predictability performed equally well in bull and bear markets. However, as we can see from the performance table below, there is a slightly better performance in a bear market, showing a 3.11% decline after 10 days. A great short-selling return over such a short period. In 4th place, we have the bullish abandoned baby reversal formation, which predicts an increase in price 70% of the time. The reversal pattern appears at the low of a downtrend, after a series of black candles print lower lows. The market gaps lower on the next bar, but fresh sellers fail to appear, yielding a narrow range doji candlestick with opening and closing prints at the same price. A bullish gap on the 3rd bar completes the pattern, which predicts that the recovery will continue to even higher highs, again perhaps triggering a broader scale uptrend. Of 4.7 million candle formations analysed, Bulkowski found only 293 abandoned baby formations, of which a reversal happened 70% of the time. There was a similar performance calculated in both bull and bear markets, with bull markets nudging ahead over a 10-day period, with a 2.59% price increase. This may be considered a small number, but annualised this would equate to almost 95% return. In 3rd place, we have the evening star bearish reversal formation, which according to Bulkowski predicts lower prices, with a 72% accuracy rate. The evening star reversal pattern starts with a tall white bar that carries an uptrend to a new high. The market gaps higher on the next bar, but fresh buyers fail to appear, yielding a narrow range candlestick. A gap down on the 3rd bar completes the pattern, which predicts that the decline will continue to even lower lows. Bulkowski found 903 of these candle formations, which again performed well in both bull and bear markets. However, we can see here that a bear market outperformed a bull market considerably, with a price change of 4.34% over a 10-day period. Annualised, this equates to a very credible 158% return. In 2nd place, we have the bearish 3 black crows reversal formation. The pattern starts at or near the high of an uptrend, with 3 black bars posting lower lows. This formation predicts that the decline will continue to even lower lows 78% of the time. The most potent setup is when the first bearish candle is not only close to the high of the prior uptrend, but marks the highest price achieved. Bulkowski says this is due to trapping buyers that entered what seemed to be a momentum play at that time. 2,660 formations were found, of which a bear market provided the best environment. The table here shows that over a 10-day period, the price changed 1.41% after the completion of the 3 black crows. Not a huge percentage decline, but with 2,660 opportunities and a 78% accuracy rate, the compounding effect would be very significant. Finally, in first place we have the bullish 3-line strike formation. The bullish 3-line strike reversal pattern carries out 3 black candles within a downtrend, each bar posting lower lows. The 4th bar opens even lower, but reverses with a wide range outside bar that closes above the high of the first candle in the series. Bulkowski discovered that this pattern predicted the price reversals correctly a commendable 84% of the time. 85 3-line strike formations were found through his analysis, of which a bear market produced the best results. We can see in the table here that the average price change over a 10-day period was 7.53%. Annualized, this would be a huge 274% return. Not a bad strategy to add to your trading toolbox. We can see this winning candlestick pattern in a previous chart example, a company called Brown-Forman. Here we can see a downtrend leading into the pattern. The pattern is formed by the 3 candles hitting lower lows, followed by the 4th candle, which opened lower but reversed considerably and closed above the first candle of the formation, often referred to as an engulfing candle. Thereafter, the price continued to trend higher and achieved an approximate return of 7% over the following 10 days. One of the best charting scanners I've seen to pick up such candlestick patterns is a website called Chartmill, and I've put a link below for those interested. So, to recap Bulkowski's most reliable candlestick patterns, in 5th place we have the 2 black gapping formation, providing 68% accuracy, more than 18,000 pattern frequency and a 3.11% return over 10 days, equating to 113% annualized. In 4th place, the abandoned baby formation, providing 70% accuracy, a frequency of 293 and a 2.59% return over 10 days, equating to 95% annualized. In 3rd place, the evening star formation, providing 72% accuracy, a frequency of 903 and a 4.34% return over 10 days, equating to 158% annualized. In 2nd place, the 3 black crows formation, providing 78% accuracy, a frequency of 2,660 and a return of 1.41% over a 10-day period, equating to 51% annualized. And finally, in 1st place, the 3-line strike, offering 84% accuracy, a frequency of 85 and a 7.53% return over 10 days, providing an annualized return of 274%. This concludes the 5 most accurate candlestick formations from Thomas Bulkowski's book, of which he shares over 100 formations through more than 900 pages. For those looking to create a system around candlesticks, or simply to achieve a better entry point for a current strategy, then this book should form part of your library. Therefore, I rate this book 5 out of 5 stars. Don't forget, hit the like button, subscribe to our growing library and comment below. Thanks for listening.